Let's have a look at the markets picture. We had the Asia Pacific shares that mostly rose as a result of what was happening with the tech shares and Wall Street. Investors paying a close eye on that. When we look at the Shanghai markets, the Shanghai Composite up 2.4%. The Shenzhen component also in positive territory, following suit up 2.3%. As we look at what was happening on the side in Hong Kong, the Hang Seng Index up 1.25%, and then the Nikkei also in positive territory, up 0.6%. As we look at what was going on the European side, stocks managing to advance, and this is as that inflation concerns that have been lingering through the markets continue to lift. We're going to be talking about that with our market watcher in terms of whether this could be something that we could see going forward, or are there other pressures that we could see on different sides in terms of adding that pressure onto those particular markets. The U.S., when you look at that, U.S. futures rising slightly, and this is on the back of what happened in Wall Street last night. But just going back to the European markets, we had the FTSE 100 down marginally, the French CAC as well up marginally. But when you look at the German DAX in positive territory, up 0.7%. Locally, when we look at what was going on in that particular front, we had results out of Coronation Asset Managers. They managing to increase half-year profit by 44% and also increasing assets under management. A little bit earlier on, you may have caught that interview that I did with the CEO of SPAR, Brett Botton, talking to us about the performances of Ireland and Switzerland when it comes to those business operations. We also had numbers out from Raynet Investments, increasing net asset value, rather than net asset value, up 22.3% as a result of their investments in the UK financial services business, as well as their investments in British American Tobacco. But to talk to us about how all of this is playing out in the markets, we are joined by our market watcher, that is Tato Mashiko from Sanlam Private Wealth and Investments. Tato, thank you so much for your time.
Good afternoon, Anastasia.
So what do you make of the JSE performance thus far, and were there any company numbers that caught your attention?
Well, the JSE has rebounded somewhat along with global markets, with risk concerns slightly being a bit more muted than they were a few days ago and certainly last week. And that has to obviously do with inflation expectations, at least for many market participants, coming down somewhat. You did mention quite a few companies today releasing results, and SPAR did come out with their full-year numbers to the year in March, and some pretty solid numbers produced by SPAR. And I believe you did go through them in a bit of detail, but particularly the European region, with both Switzerland and Ireland producing strong numbers, and some margin uplift, which led to HEPS being up over 30%. So quite a solid result there.
So local earnings season has kicked off. Going forward, are there any particular companies that you're going to be paying close attention to, or anything else that you're going to be looking out for?
Well, going forward, there are quite a few factors to look out for. As far as the global economy is concerned, the main factors haven't really changed. It's just perception around those factors, which is slightly tilting in one direction, in particular with inflation and the view towards it being somewhat more transitory. And we have seen commodity prices coming off slightly, still up over 30% year to date, if you look at LME prices. And that has to do with certain factors in China, with the authorities looking to clamp down on speculation and supposed hoarding of materials, and obviously that has a positive impact on consumer disposable income and potential earnings of companies going forward. But so far we've seen pretty solid results from quite a few companies. Last week we saw Dis-Chem as well reporting quite solid numbers, and Richemont as well reporting their Q4 numbers and showing solid performance from the Chinese region in particular. So as we go forward, there are quite a few factors that people will be looking at, but obviously each data point to some extent changes people's views. And so whilst we may be slightly positive now, and when I say we, I mean the market in general, that may turn towards a slightly negative outlook if future data points disappoint.
The past few weeks have not been kind to the dollar at all. In fact, over the past month, it's weakened against every G10 currency, which got me thinking about the rand and, wondering how that's been performing. What's your assessment of the rand at this moment?
Well, the rand is somewhere around 13.8 at the moment, which is quite a strong level if we take into consideration long-term factors around relative inflation levels and purchasing power parity, and as well as likely long-term interest rates once we move into a rate hiking cycle globally. Those factors, as well as if we look at the local fiscal situation, the fact that we are obviously non-investment grade and the risks around a potential fiscal situation going forward. Obviously, there are quite a few factors that would suggest that perhaps the rand in the short to medium term may continue on its current trajectory, but longer term it may be overvalued. What we do know obviously is that relative interest rates and yield carry from DM investors looking for yield pickup is obviously a compelling reason for it to continue at current levels and capital flows coming inward. If we look at 10-year US bonds at 1.6% versus our R2032 at 9.6%, you've got an 8% nominal spread. And obviously, developed markets yields in real terms are negative at this stage. So it is quite a compelling reason, at least in the short term, assuming there is no further negative news and assuming that SA GDP continues to rebound from last year, which leads to improved tax receipts, then the default fears can be pushed back further into the future. And so for the short to medium term, I wouldn't be surprised if the rand does continue in its current period of strength. Of course, if global sentiment turns downward, given that the rand is the most freely floating emerging market currency, we could see a sharp reversal in that trend as well.
Speaking of global sentiments, do you get the sense that there's inflation anxiety relief moving through the markets right now?
By inflation anxiety, I presume you mean a somewhat more benign outlook on inflation?
No, I'm talking about, the concerns that we had over the past few weeks about whether inflation fears might prompt the Fed to act sooner rather than later. Do you think those inflation fears have subsided, or do you think it's a case where at some point they might be reignited when the Fed has to act sooner rather than later?
I would say that those fears have been dealt with in a positive sense, to the extent that it's unlikely that the Fed would act sooner than its current guidance. And they obviously have stated that they're comfortable with inflation breaching their threshold in the short term, which it has done. But obviously they'll continue to track the core PCE deflator in the US, and their view is that we are seeing more of a short-term spike due to factors around supply shortages globally, whether it is in semiconductors or in other areas, and those will be dealt with in the next few months. And so it is probably unlikely that they would push their rate decisions forward in terms of their intended hiking cycle, unless there are dramatic and persistent growth in underlying inflation in the US. But obviously, the data points we've seen so far suggest that it may not be permanent, and that is the current view which they are taking. And so the market as a whole is fairly comfortable with the outlook as it stands.
All right, Tato, thank you so much for your time. That is Tato Mashego from Sanlam Private Wealth talking to us about the markets picture. That's it from me. I leave you in the safe and capable hands of my colleague Nompumelelo Siziba. Until next time, goodbye.